Hi guys, welcome to this forecast here based on the assignment that I gave you guys in the mentorship group. So we're going to look at dollar index, and we're going to look at USD/JPY, and finally we're going to look at Euro USD. But what I'm going to do is I'm going to break the videos in section, as in we're going to have the first analysis is going to be on the dollar index, then the next video will be on USD/JPY, and finally Euro USD. So I'm going to try my best so that the market structure breakdown is not that long. The top-down analysis from the monthly is not that long. Reason why I'm doing this, guys, is this has to be in you. You see, you have to teach yourself to do this maybe once a month, once every 2 months, to like forecast what the next month, what the next quarter will probably be doing. So today we're going to focus on July going into August, on those 3 assets that I've mentioned. So starting with the dollar, looking at the past say 3 months, so that's June, May and April. I've been shouting and telling people that dollar is gonna get weak, and that's exactly what happened. So now looking ahead to July and probably first 2 weeks of August, I do expect dollar to continue with its weakness, though there is a fairly good chance that we can see a rally to the upside. But now this depends with fundamentals. You see, technically we are going to see a weaker dollar, but remember, the market is dynamic, it can change anytime. So with fundamentals in play now, yes, we could see dollar getting strong and erasing all those gains from June. So now let's look at the past 3 months. Clearly dollar was bearish, right? Where did it trade to? Dollar traded all the way to this bullish order block here. This is our bullish order block, our last down candle before we had this rally. Right now, with that in mind, right, I'm going to highlight the closing price of our bullish order block, which is coming in at the closing price is coming in at 96,095. Those in a mentorship, you know this level very well. I've been mentioning it, 96,095. Right, so I'm going to highlight the 96,095, which is our closing price on this bullish order block. It's a very critical level, 96,095. 96,095. That's our strong area of demand, right? That's a very strong area of demand. So this is an area where you're going to be hunting for long positions. So now that's where June traded down to, and there was a very strong rejection. I mentioned this in the probably the weekly forecast from 2 weeks ago. So with that in mind, we have highlighted a strong level that we have to take note of in this coming month. So that's the first step. The next step, we've got this last up candle here, right? And looking at the body, right? The body is a wide body. It is our last up candle after a rally, a clear definition of a bearish order block. So what I'm gonna do in this candle, right, there's two levels that I'm gonna highlight. First is the opening price and the closing price, and then I'm gonna also highlight the mean threshold of that body. So now the opening price is coming in at 9783, right? That's our opening price. So I'm gonna copy this, I'm gonna place it here. So we've got 938. Let me just get that price again. So we've got 97830. That was our opening price, 97830. Some might say, why am I marking these levels? You are going to see further on as we break down the structure to a lower time frame why I'm marking this level. And the close comes in at 98.94. The close coming in at 98.94. 98.94. So this is basically something that you can do probably on a Sunday, you see, or Saturday afternoon when the markets are closed. Right now I'm doing it here. It's a Friday, 3rd of July, just before Independence Day, so it's a holiday in America. There isn't much liquidity or volume in the market, so price didn't move that much today. So now I've highlighted what the opening and closing price of our bearish order block. So I'm just gonna find a rough, just gonna do an EST of the main threshold. So I'm gonna use my fibs, right? So you can see the equilibrium of the body of that candle is coming in at 98.378, right? 98.378. So I'm gonna copy this line, 97.378. 97.378. So this is our mean threshold. That means our 50% price point of the body of the bearish candle. So it's 98. That price is not correct. Let me just check again. 98.378. I had put 97, which was not correct, right? So this line has to be 98. 98, right? So this is our mean threshold on the monthly level. So I'm gonna give it a different color. I'm gonna give it, say, it will still be a solid line, but I'm gonna mark it blue. So you have to know that this is your mean threshold on the order block. The solid line, those are our monthly levels. So you can clearly see that June broke the market structure to the downside, right? This is our bearish order block. June, we broke down, right? We broke down the market structure to the downside. Now let me just highlight the price points. So I've got 97.823, and then we've got our mean threshold, right? And then we've got the closing price, and then we've got the closing price of our bearish order block coming in at 96.095, right? You already know that price point. So this, now what this does is it defines our trading range of what we are going to be looking out for from a monthly point of view. You can clearly see that the relative monthly strength is pointing to the downside. This is very crucial, guys, because it's gonna determine your platform of where you're going to trade from. So yeah, as much as the video is slow and maybe boring for some, but it's very crucial that you understand this critical part of your analysis. So you can clearly see that the monthly strength, like the momentum on the monthly, is pointing to the downside, meaning we're expecting a weaker dollar. Now there's a couple of things that can align with this decision, with this analysis. Why should we expect a weaker dollar? If you look at the fundamental side of the issue, there's a whole lot of things. You see, there's COVID, number one. There's US and China issues, both countries throwing punches at each other, you see, sanctioning each other's delegates, you see. And then number three, remember we are in the election year, US election year. It's very critical that we take note of that, though we might be still a bit far, but you can already see that the decisions that these contestants are doing will definitely have a bit of an effect on the American economy, you see. And let's not forget COVID, the lockdown. What effect has it had? You see, the number of people in America that got laid off, the corporations that are struggling. So we need to put that all into perspective, and most of those are pointing for a weaker dollar. Now, with that in mind, we've already determined that the dollar in the coming month will be preferably weaker, right? So now we have done the whole part on the monthly chart. Yes, some are gonna say, oh, you didn't look at this candle, but remember, the past 6 months or say 12 months is what's most important. And in times like this, where there's too much uncertainty in the market, right, because of the pandemic, it's best to look at a shorter time frame on a monthly. So we have looked at say from I have defined my range using price action from December. That means the last 6 months, right? December, January, up to now. Yeah, that's 6 months. So that's where I've defined my trading range, and you can already see that the trading range that I'm working with is defined between 97,823 and 96,095. So this is my trading range. You see, this is where I'll be hunting for setups on a monthly chart, and which setups are most favorable. Short trade setups, right? Yes, we had that strong rejection on the previous candle, which is June. We had that strong rejection, but price did not show us willingness to trade to the upside when June opened. It just crashed. So we could see further bearish moves to the downside. So now what I'm gonna do is I'm gonna drop down to a weekly chart, right? Now on the weekly chart, you can still see the levels that I've defined, right? You can still see the levels that I have defined. Okay, let me zoom in a bit and create more working space. So the monthly levels are solid lines, right? And you can clearly see what happened in June. We had a deep down into 96,095 and a strong rejection from that level. Now look what the first week of July has done. It traded all the way to 97,823. Now that's crucial. What is 97,823? That's the opening price of our monthly bearish order block. Remember, 97,823, this up candle with the long wicks. If we go to a weekly, price traded to that area and rejected to the downside. You see, that is very crucial to take note of. And we've got these two up candles, right? You see how many wicks are there? There's a whole lot of wicks, so we can probably say below 96,093, right? There is a whole lot of sell stops, right? We've got sell stops lying below the 96,093, and from the upside, where do we expect to see buy stops? Where is the liquidity pool? Above 97,823. This is where you're gonna find buy stops for people that are short. Remember, you need to know exactly what we're talking about. This is taught in the mentorship. So we've got buy stops above 97,823, and we've got other buy stops above 98,933, right? Let me just correct this. This is not correct. So we got buy stops so these are liquidity pools, you see. So when we talk of liquidity pools, we're talking of areas where price is going to get attracted to create liquidity in the market. This is where institutions, you see, institutional traders will be looking to hunt for liquidity. All right, so now on the weekly chart, you can already see that the monthly levels, they all correspond on the weekly chart. So now what we're going to do is we're going to drop down to a daily candle, right? Now on the daily time frame, right, we can see that price is now trapped in a bit of a small range, right? We've got a bit of a small range after this sharp bearish move to the downside. What are the odds that we're gonna see a measured move again of the same sort here? What are the chances? Very likely. Now, but this all depends with you, how you're going to be looking at the market. Now, when we look at the daily price action, what do you see? Right? This is what you have to ask yourself. What do you see on a daily time frame? Can you see where I put my buy stops? There is buy stops here, there is buy stops above here, and we've got sell stops. Right now, with us expecting a bearish dollar, I'm expecting dollar to trade back to 96,095 and clearing up all these stops, right? You see these equal lows here. There's sell stops. If market does trade to the upside, I expect it to clear these buy stops and then turn bearish. So with that in mind, looking at dollar index, I'll only be interested in the market when price gets to 96,095 or when price gets to 97,823, if I'm not mistaken, right? 97,823. That's when I will get interested. If I'm to place my pending orders, right, these levels are the ones that are going to be in play, right? I'm going to be focusing on those levels. So now I'm gonna go to on a daily time frame. Yes, it's worth take noting that we've got a bearish order block here, right? I'm just gonna give it a different, gonna put it black but dotted. It's gonna be a black dotted line so that I know that this is a daily level. So we've got a bearish order block, and then we've got bullish order block here, right? And you can already see our last down candle here is coming in on the monthly, so that's our bullish order block on a monthly time frame. So now I'm gonna go to H4, right? We might not even see price trading above here, because already we have had turtle soup here, stop hand, market spike into supply and close below and then tumbled. So now we are going to go to a H4 chart. Now remember, my dotted line is my daily level, which is my the top one is my bearish order block, the bottom one is my bullish order block. So you can already see price is caught up in the 50% range of my bearish and bullish order block. That's a no man's land, right? So if you are going to be trading dollar index, wait for price to reach at least 9660 or 97623, which is our 97823 range, right? So now looking at H4, I will be expecting dollar. Right now it's trapped in a pivot point, so market can move either way. But now with those levels that I've highlighted, it's worth take noting that get interested when price reaches here, right? Don't just open a chart, look on a 15-minute time frame and then say, no, I'm going to trade short, without any emphasis, without any analysis backing up that trade. Yes, personally for me, if I enter a short position, say from this level here, right, if I'm expecting price to trade to the downside, if I'm wrong, right, if I'm wrong with my analysis, I'm gonna accept that I was wrong, because market is gonna break this level with massive momentum and it won't even look back, you see. But what are the chances, right? You just look to the left. What are the chances of market breaking this level, rapidly going to the downside without some retracement? If it does break strong to the downside, then I'm gonna accept that I was wrong, you see. Rather than entering in this middle range here, you won't know where price is going. So with that in mind, that being said, expect dollar to trade lower. That means when you get into your trades on dollar, make sure you're hunting for short positions, right? Make sure you're hunting for short positions to the downside. But if price does break 978.23 or 97830, which is our monthly level, and close above, then we could see the buy stops. We could see my price trade all the way to the 50% of our bearish order block on the monthly, or all the way to the 98.934 level. But for now, expect dollar to trade lower, right? So this concludes my analysis on the dollar index. In the next video, I'm going to do a USD JPY, and this one is going to be short and straight to the point, because we have already done all the work on dollar index. That means if we are expecting a weaker dollar, then we also expect yen to get stronger. That means yen is gone, USD JPY will be trading lower, right? Remember, when dollar gets weak, USD JPY, it's the yen which is getting stronger, but price will be trading lower. And finally, I'm going to look at Euro USD, where we are going to be anticipating bullish movements to the upside. So yeah, I hope you are going to mark out these levels, because these levels are going to be in play for the next month and a month and a half from now on. You see, each time we see dollar coming down to these levels, then we take a decision, we make a trade. So yeah, that's pretty much about it regarding dollar index. And for those who send me your assignment answers, most of you guys, the ones that responded, you did very well, and I'm very happy with that. So I hope you're going to use my analysis and compare it to what you have done and what should have been added. Remember guys, once price gets to an interesting level that we are hunting, say price gets to 97.62 or price gets to 96.60, there's a whole lot of aspects that we have to look out for, and for some I haven't shown you those aspects, and these include fair value gaps, liquidity voids, you see, breakers, things like that we have to look out for in order for us to make sure our analysis is correct. And if we don't see some of those things, then there won't be any reason for us to get into that trade. It will be too risky, you see. But most of you guys, you already know the main criteria that we look out for: bearish and bullish order block. So yeah, that's pretty much about it with the dollar index. I'll see you in the next video where we're going to discuss USD JPY. I wish you good luck and happy trading. Thank you guys.